Welcome to episode 1 of Road to Retirement with UK Investor 2021. In this episode, I'm going to discuss making a plan and considerations for retirement in the UK and my current plans for retirement. Let me preface this video by saying I am not a financial advisor and nothing in this video should be considered financial advice. For some, planning for retirement is just working until you're eligible for a state pension at 68 years old. But is this a good plan, or is it even really a plan at all? Well, probably not. You only receive £179.60 a week, which is approximately £9,000 a year, or £780 a month. That doesn't really sound like a retirement to look forward to or dream of. I certainly couldn't live the life I wanted with £9,000 a year. In fact, I probably couldn't even really live at all. Imagine working and paying national insurance contributions for almost 50 years to in return receive less than a minimum wage income for the final 17 years of your life. It just doesn't sound like a great deal. Some people may be content with this as a strategy and as a plan for retirement, but I'm not. I think most of us would like a much higher quality of life and income, and actually don't like the idea of working to the age of 68. Which brings us to the FIRE movement. The FIRE movement is pretty self-explanatory. It's about financial independence and being able to retire early. I personally don't want to have to rely on working 40 hours a week for a salary from an employer, and I also don't want to rely on income from the state to just scrape by an existence, either on benefits or on a pension, like a state pension. I want to be able to pursue and enjoy my interests and hobbies without these constraints, which is what drives me to want financial independence and to be able to retire early. FIRE isn't a plan in of itself, it's just an idea. You need to figure out how much money you need and then implement a strategy to get that amount of money so that you do have financial independence. So how much do you need for financial independence? Well, the consumer group Which surveyed retired people earlier this year to determine their spending in retirement and banded them into certain lifestyle categories, which they have labelled as essential, comfortable and luxury. Let's have a quick look at the breakdown of each of these lifestyles. Firstly, we have essential, and this is a really basic lifestyle, with the majority of expenses going to groceries, housing payments and insurance. This is probably not a goal or dream retirement for most people. That's probably not what many of you will be looking for in retirement and when it comes to planning for your retirement. Secondly, we have a comfortable lifestyle. The largest expenses now on European travel and holidays, coming in at just over £4,600 a year. In addition to this, we now have additional spending on recreation, leisure, tobacco, alcohol and charity. This is probably more the lifestyle you picture and imagine when you think about retirement. Finally, we have the luxury lifestyle band, of which the two largest expenses in this band are holiday related and the third largest expense is now on cars, with a combined total of the largest three expenses coming in at over £16,000 a year. Whilst I would like to travel when I retire, I don't envisage needing to spend the £13,000 a year, which is broken down in this luxury graphic. I think that's rather extravagant. So all things considered, I don't really agree or need what the breakdown that Which has determined is. So I've created my own bands loosely around this data. The essential band stays pretty much the same at 1,500 to 2,000 a month, or 18,000 a year. The comfortable band at 2,000 to 3,000 a month. Luxury at 3,000 to 5,000 a month, and then luxury plus, which is 5,000 or more a month. Because if you've got 5,000 a month to spend every single month throughout retirement, you'll probably be living a pretty good life, at least in the UK. Other considerations, other than just money when you're thinking about retirement, is actually the tax you're going to pay. In the UK, there's no tax applicable on withdrawal from an ISA. However, tax is applicable when you have a pension. So this is something you should consider when it comes to allocating and planning for retirement. Another consideration is how much you can safely withdraw a year, which most professionals typically agree is around 4%. So to determine your FIRE number, multiply your planned expenses or income by 25. So if your expenses were 20,000 a year, you'd need 500,000 to retire. So now we get on to my personal FIRE number. I can comfortably live off 2,500 a month, which is 30,000 a year. If we assume a safe 4% withdrawal rate, this gives me a really nice low FIRE number of £750,000. However, it's not even that simple. There is an external force that wants to keep me wage slaving forever, and that force is inflation. Throughout my lifetime, inflation has averaged just under 3% a year. And what this means is that my 750k FIRE number, which I have now, will likely not have the same purchasing power 20, 30 or 40 years down the line when I actually have £750,000. Inflation erodes my spending power. The only way I can actually retire is if I can beat inflation. And I certainly can't do that in a current account or cash ISA paying 0.5 to 0.6% a year. So my personal plan is to invest a large portion of my income every month into stocks and shares ISA, primarily in the S&P 500, which has an average annual return of 10%, or around 7% when accounting for the inflation. And this is the foundation of my FIRE plan. So how do I get to 750,000? Well, the answer is investing. I need to invest a significant portion of my income every single month without fail. The investment strategy that I am using is a core and satellite approach, though there are many others. The core is made up of passive ETFs, which should provide consistent, long-term, reliable growth. This is where the majority of my money will be invested. If you wanted a truly hands-off approach, you just invest the entirety of your savings each month into a broad index ETF, and you just have a core approach and not worry about anything else. The satellites are higher risk individual stocks that I believe can provide better returns than the core ETFs. But this comes at a higher risk. And because I'm not a professional trader or investor, these will be considerably smaller positions in my portfolio than the core, as I'm not entirely confident that I will beat the market in the long term. So we come to my actual current strategy. My current strategy gives my portfolio a weighting of 67% towards the core and 33% towards the satellites. My core is comprised of 3 ETFs. Firstly, VUSA, which is a Vanguard ETF that matches the performance of the S&P 500. And as previously mentioned, this is the foundation of my FIRE plan. The goal is for this to make up 42% of my entire portfolio. Secondly, I have VWorld, which is a Vanguard fund, which is a global fund with 3,600 holdings. This is a large crossover with VUSA, but gives exposure to emerging markets also. Whilst it has a lower historic return than VUSA, it is more diversified. The final ETF I hold is EQQQ, which is an Invesco ETF comprised of the 100 largest companies of the Nasdaq. This has performed phenomenally well over the past 5 years, outpacing VUSA 2-1. It's mainly comprised of big tech and has a significant overlap also with VUSA and VWorld. Now we'll look at the satellite stocks in my portfolio, starting with the major ones, which are all big tech stocks. Firstly, we have Goog, which is an Alphabet Class D share, which has a target weighting on my portfolio of 11%. Secondly, Facebook, with a target weighting of 10%. And finally, Amazon, with a target weighting of 7.5%. I'll discuss why I've picked these stocks individually and their respective weightings in future videos. Now we have my minor satellite stocks, which are even higher risk and higher potential reward stocks. Firstly, we have AMD with a target weighting of 2.5%. And as you can see, AMD has had an incredible return in the last 5 years, with 1700%, outpacing the S&P 500 by a factor of 17. Finally, we have Coinbase, which is a way of me increasing my exposure to crypto markets without direct investment in cryptocurrencies. This is a visualization of my portfolio with the core and satellites. I have a rather large core, but actually I have some very large major satellites, and this is a higher risk with such a large allocation to individual stocks. But due to my age and my desired returns, it is a calculated risk and one I'm willing to take at this stage. So now I have a specific FIRE number and a plan of how to get there. When can I actually retire? Well, the answer is not yet, and not for a while. I only started seriously considering FIRE in January this year, and so far only have approximately 20 of the 750,000 I need to reach financial independence. I am doing quite well so far, with a return of just over 11% in the 9 months, including dividends, and I'm investing over £1,000 a month. If I can continue to invest this £1,000 a month with a target return of 7% a year, I should be able to retire in 26 years at a rather young age for retirement of 55. Alternatively, if I was happy with a basic lifestyle and living off 18,000 a year, which would give me a FIRE number of 450,000, I could retire at 48 with the 7% return. However, if I can manage to maintain my current projected return of just over 12% a year when inflation's included, and invest 1,000 a month, I can retire in 19 years, age 48. Hopefully, under ideal circumstances, I can try max out my ISA allowance and invest 1,600 plus a month every month from now till retirement. And if I can maintain the higher return, I should be able to retire maybe even 10, 15 years. If only I'd have started 10 or 15 years ago. Finally, it's also worth discussing my short-term goals as well as my end-game goals. So here are my goals for the rest of the year. I'd like to achieve a 10% return on my ISA portfolio by the end of the year. I'd like the portfolio to hit 24,000 plus. I also need to remortgage my house, which I'd like to release some equity from to either invest or to buy a rental property. We'd also like to expand this YouTube channel and make 5 more videos or 5 videos total this year and max out my ISA allowance. And finally, I would like to find a new location for my business, although this may be very, very difficult and potentially not possible. So that's it. Thanks for watching. Please like, subscribe, and tell me how bad a job I'm doing in the comments. Much appreciated. UK Investor 2021.